What's up, YouTube? Welcome back. So, this is going to be a little bit earlier than the normal time. Give me one hot second. Ooh. Give me one second, guys. Yes, so if you're new here, technical analysis, I set alerts. That's how I do things. So when it reaches these magic yellow boxes, I do get an alert, and then I go buy things. So, hang on. I'll show you what I'm looking at. We're going to talk about the stock market crash. Let's give it January 28th. Let's give it 28 days. Let's do 135s. I'm going to try to get that to fill. January 28th. What are we doing? 135s. I'm going to do right at 9:05. And then, let that, there we go. All right, cool, sweet. Anyway, back. Yes, I did just buy those. The stock market, well, first of all, for anybody that's new here, crash, I haven't made it yet, but it might be in the title or the thumbnail. If you're brand new, do not buy anything. Well, first of all, I'm not a financial advisor, so I'm just here kind of sharing my thoughts and opinions on things. You do whatever you want with your little money, or money in general, so I shouldn't call it little. But I gotta say, crash is a keyword. Brings more of you guys in. YouTube puts it out there a little bit more. People are emotional. So if you made it here off of that, it will never actually be clickbait, but I will give you my opinions on whether it will happen or not. But just in case, because I do think we're going to see some rough times. You know, if you guys do see that thumbnail pop up, that is, it's not a I better short things. It's I better hear this guy's opinion if you value it. So right now we have bonds shooting up. So the 10-year going to the moon. I don't know if I really want to zone this out. But let's keep an eye on this right here. So 10 years up, which you know what that means. Tech down, you know, whatever. Let's just look at the quick markets really fast. You see IWM just taking a spill. Now we saw a little bit of a bleed off, kind of a push down, and then we held. And then right here, FOMC minutes were released. Now you'll see this across the board. So it kind of came out with mixed results a little bit. Now, something I went over with my mentorship group a few nights ago. Yeah, brand new beginning of the year. There's two things I think they're going to crash this market, going to send it down, and tech will lead the way. I've been saying this for a while. Tech is the one that stands to take the beat down the most. Tech just got outside the expected move for the week as well. There's a reason that zone's bright yellow. We've got a lot to break down, but the two things I think, we've all been talking about rate hikes, rate increases. We're going to end the tapering, and then we're going to add interest. So kind of all priced in. You know, the Qs have been choppy for a while. You know, if you've been following me or my other channel for a while, you know we've been keeping an eye here. And then the one time we push above it, that's retail week. Aside from that, sorry. So from here, retail week, banks are gone, and now they're back. We're below that yellow again. The two things that are going to just be dangerous for this is, one, rate increase, rate hikes earlier than planned, or a higher rate increase than planned. That will create uncertainty, that does create doubt, and that creates fear, which people will start getting out of things. There is a lot of money in tech. People can take profit in tech. They can cut their positions in half, just like I did. So I cut my Apple position in half because I think I can put that money elsewhere and make more money. You know, it's not that I don't like Apple. And I'm sure people leaving tech, not that they don't like tech. Yeah, Amazon's not going anywhere. Apple's not going anywhere. Microsoft, still awesome. But your opinion on how that company is versus the stock market, it's just not reality. It's not how it works. Again, let me just show you guys Microsoft really fast. If you think as people are buying things, that's what makes things go up. You know, think about your house in the year 2000. You may have just now got a computer. There's probably one computer or no computer in your house at all. Microsoft. I'm not even talking about the little colored box Apple has. But between the year 2000, let's go 2013, you have multiple computers in your house. You have laptops now. You have everything Microsoft product. You have a lot of it. Xbox, the works. And Microsoft didn't go anywhere. Now all of a sudden it is. And everybody thinks, you guys have your reasons. Some of you guys, I'm sorry to think this, but sorry to think this. You guys think because Spider-Man came out, breaking box office. Oh, a lot of people went and saw Spider-Man. They saw Black Widow. They saw it all. So AMC to the moon. And I'm sorry for the apes that are in this having a red day. And even more sorry for those that are actually thinking about adding on to that. That'd be really unfortunate. I think. Sorry. Just my opinion. I'm not here to hurt anybody's feelings. But again, not how the market works. There's not a movement. The stock market does not know you exist. They do not care about you. None of it. No one cares about you or your account. I promise. So you weren't sticking it to anybody. There were a couple people that got bent over. If you were short AMC or GameStop and it pushed up, it wasn't a good day for you. There was just no movement. Shout out to the people that did go bankrupt, though. They might have felt something. They might have felt a little movement inside of them. But in reality, not how things work. Let's get back to the market. A lot of things taking a spill on this FOMC announcement. And maybe TradingView will load. Sometimes I pay my internet bill, but sometimes on red days I can't afford it. Just kidding. Is it because I made fun of AMC? I won't do it again. Well, maybe my internet just went out. We'll break the rest of this thing down manually. Man, I really want to break down QQQ right now for you guys. Did that just go? Right as I get here. Anyway, we're outside the expected move. This is where market makers either A, need to rein that thing back in, or B, we're going to 2 standard deviations. And right now, not looking so hot. So QQQ, let's go to, I want to say this was 753. If I remember right, QQQ was, today's Wednesday, so from here, 750. Man, did I nail that? This is gonna be close. I want to say it was a $7.50 move. Maybe we just, whatever. Let's draw that out again. There's 1 standard deviation. Here's 2. Again, market makers, this is where hedging takes place. Right now, this is where, guys, algorithms. Everybody tells you about algorithms and all that, and they're so scary. I'm literally drawing them out for you right now. Everything hedged. Market makers, they are at a 0 delta. They are the neutral playing field. You are one football team. Bank institutions, they are the other. Market makers, they are the field. They provide that liquidity, just the ground to play on. They have to maintain a neutral bias. Right now, they are outside of things. So things need to be accounted for. People buying puts need to be accounted for. So they will actually go out and short shares. That's how you get these drives down and back up. Maybe there's dip buyers, rein it back in. My experience, this is a number I made up clearly out of my own head, just from experience. I'm going to say there's an 80% chance we rein it back in. We dip below, but we come back in. Be careful trading that dip. This is where volatility happens, though, because right now we're doing, one of 2 things. This is where, again, volatility. We're coming back in. We're coming in hot. And right now there's enough fear, especially with the bonds pushing up. Hopefully they chill out, but enough fear that they could bring tech down a little bit further. Now, where I'll be buying it this week is I'll take a crack at that 383 mark on QQQ. Might even buy TQQQ. Might buy some QQQ calls. Those will just be trades for like a rein it back in, like you guys watched Tesla do. Okay, so if we look at Tesla, let's really get to the hourly. There you go. So pushed up here pre-market. We held already at the expected move. Here comes the squeeze, the delta squeeze, gamma squeeze, whatever you guys want to call it. It's delta hedging. Gamma's a Greek involved in that. We held out there, brought it back in, tried to hold this, just getting it back in. Looks like market makers might have had just the perfect week priced in already. I think breaking below that blue one, I might even short. I know that's like blasphemy for a lot of you guys, but I might even short Tesla a little bit. I don't like shorting Tesla or swings. I don't mind shorting it intraday. But I want to, if there's ever a time I'm shorting Tesla, and to be clear, I have an investment account that I don't touch Tesla. I just own it because I have an IQ higher than single digits. I think that's the only requirement you need to hold Tesla shares in your investment account. But to trade it, there's a lot of money to be made inside Tesla going up and down, a lot of movement. I just like to be able to actively manage it. I do not like imagine being short here and catching that gap up in the morning. It's not fun. It's happened where I've been long and caught a gap down like that. It's no fun. Just it happens more to the bears than it does the bulls. So kind of interested in actually buying it. Remember, we're here now. Any algorithms taking place here. So are they selling? Are they getting back in? That brings us more back into here. Again, volatility. I was looking for a bounce inside this, but a lot of things are taking the beat down today. So I want to say be careful buying the dip, because if there is a time, I have a couple alerts going off. If there's a time to be cautious in tech, it's now. I said, not later after you've bag held. Don't tell me 6 months into 2022 that, Don, I should have listened to you. I'm going to work on not bag holding anymore. Like, this is the time. If you are red, you probably have, what kind of issues do you have if you can't break up with something? Attachment issues? You think you're attached to someone. Really, let's say you bought Apple at 180, and here it is, it's down here. Right? You don't have Apple at 180. You have Apple at 176. You're attached to this 180 number. Your money is not 180. You're not making money back. You're just making money. The stock market's going to go up and down. You're going to have whatever you have capital, it was at 180. It is now, whatever it is now, attached to these 4 letters. Right? So if you want to keep it in those 4 letters, you think those 4 letters are going to perform, then you keep it there, or you move it into another one. Closing one trade and buying another is not locking anything in. It's moving money around. The whole concept of the stock market is just moving money around, and emotional people, uneducated, zero experience. That's not a dig. They take the biggest hits. They make the most mistakes, and they just give money to somebody else. There's a loser in every trade. My account is full of them because I get to take everyone's money. Because they're panicking at the bottom when I'm buying, and they're buying my shares at the top because they think moon status. Someone told them on Facebook. So it's not a dig. If you're bag holding, this just isn't the time. Bag holding in the previous years, I mean, the market has taught you that bag holding is okay. Sure, why not? Yeah, you take a couple of red spills, but you probably bounce back. All you had to be was in one of the 5 main stocks. 5 stocks was more than 51% of the stock market's growth. If you were just in one of 5 of those, or all 5 of those, all you had to do was wait and your money went up. You didn't have to play Super Trader. You had to just kick your feet up on the desk, go play golf, do something else. The stock market has trained you to bag hold. But I'm here to tell you, I don't think we see a spill like that. Let's say we take one of these down. You can get out and get back in cheaper. You can short this market. You can stay in and grab puts. Like, there's a million ways to trade this. Try not to be so stuck on that one. The reason that I have crashed something in the title is because, yeah, tech could get smoked. If they're leaving tech, they are exiting tech. There's a reason that zone is bright yellow, and they are leaving. They are getting out. Those are the big guys getting out. Who you call smart money and they call you dumb money is proving their point right now. They're in tech, not anymore. Like, they're leaving, and here you are saying, to the moon. Don't do that this year. If you're playing the bounce, whatever manager positions you're in now, but ask yourself, if you were flat out not in anything, would you go buy the ticker you're red in right now? Because if the answer is no, then why are you in it in the first place? So, not to call this a warning for anything, but this probably just isn't the year for tech. If you watched the previous video, it has bubble in the title, or the thumbnail. It's a bubble with the Apple's logo on there. I think tech pulls an Amazon, which is just sideways. Like all last year, sideways. A lot of money to be made. I made a lot of money. I don't like bragging about money, but I made a lot of money in Amazon. And everybody just bag holding shares didn't make jack. They would have made more money buying SPY and holding it. Pulling the Dave Ramsey method. But I think tech does something like this. And if you can take advantage of these waves, you're killing it. If you can get out and buy the dips, you are dodging red candles, still making more money than the person holding it. Skip a few red candles this year because we might see a few of them. One thing I do want to point out was this channel. Somebody in my my mentorship pointed this channel out, which I did like. I just had this resistance right here drawn. But right here, let's say we'll even delete my line. Keep it there. So, come screaming back down to there. Maybe we keep this channel up. We keep it going. Stocks, when they push up, they pull over or they pull back. Maybe get a little bit of a mix. Then you get that bounce. I'd be careful going short here, but then breaking that. How many people are watching this, watching that break, and getting out? These purple zones are weekly zones. So, yes, Q's breaking that. You're in for a fun time. The top 3 stocks in Q's, the QQQ, right? It is Microsoft, Apple, and Amazon. So before we get out of here, let's just take a... there's a pullback. It's pullback territory. Here's correction territory all the way to here. That's just a stock market correction. Okay? Let me fan this out for you so we can show you what a crash looks like. Grab it from here. Where are we at? A crash starts here. And I am saying crash. 21% and up. Here's a 30% crash. Imagine holding it the whole entire time. Now, things will ebb and flow on the way down. That's where you will lose more money. Now, if that didn't make sense to you, keep holding things you're in, and it'll be clear later. What's going to happen a lot of times when people do bag hold things is, let's talk about this. You know, then you're going to, I bag held this and it worked out great. Sure, it did. You bag held, and then on one of these green days, right here, just this one green day, you're less red. You feel that weight off your shoulders. You think, oh, it's finally coming back. This storm is almost over. And then the next day is a kick in the nuts. These green days are a time to just, hey, you lost a little bit less. Let's manage things. Use that weight off your shoulders as a time to think, do I need to be in this? You don't want to panic sell at the bottom, but maybe when it fires off a green candle like that, you say, okay, no new lows. If it breaks that, I'm out. And then you do just get out. Could it do something like that? Yeah, of course. Make that decision to get back in. But what if it doesn't do that? What if I'm right and it pulls a 30% down and you're still in it? That will look like peanuts compared to what you'll be down later. My whole mission on here is to just explain how I do things and to stop you guys from making stupid mistakes like that. Holding things, watching your money go away is the one thing I don't want you guys to do. That's the one thing I'll get passionate about and get fired up about on any of my channels. Is you guys just losing money. I don't do call outs. I just explain the mechanics behind things and just kind of give my opinion. You can call it a coincidence every time. And you can believe fundamentals, whatever you want, if you just have a plan in place. That's all I ask. My plan may be different from yours, and that's fine. We're all looking at the same charts. Have a plan and get out. Because if tech does crash this year, do you really want to hold it all the way down? And what if it pulls a Cisco from the dot-com bubble, where it crashes? 20 years later, you're 3/4 of the way back to break even. Like, that's not a fun thing to be in. Let's go over some hot ones, though, really quick, because they're all taking a spill right now. Tesla, kind of in that zone. I don't want $1,100 to break. Hoping for a snapback tomorrow. Just between now and tomorrow, I am, like I said, I just went long AMD at the beginning of this video. I'm thinking we rein it back in. That's going to be my place. So if you do see me down, if we drop down even further, just know I'm having a red day. It's not going to be fun. What is Amazon doing? Bouncing off that one. Right now, currently, I'd be careful. I did actually just tweet about this. That's the 300 Spartans holding it right there. You know how that movie ends. Let's try that again. Apple, almost to my alert. Again, as a trader, that's where I am going to trade Apple again. I sold my Apple position, half of it because I was just hoarding shares. Now I'm probably just going to grab some calls right here and keep it very short term for the time being. I'm actually not entirely worried about January, but I think things might get rough after January. What are some other ones? How is Microsoft doing today? Getting the bully beat down. Now, Microsoft's an easy play right now. It'll take all the 4 brain cells for you to figure this out. And here's a great example. I don't often get picture-perfect plays. You catch the knife. You get that play right there. Like, Don, I agree. I'm going to catch the knife. It's a snap-back play. You don't want it to go below these wicks. Remember, someone once called me a cheater because I put my stops below the wicks. Whether you want to agree with that or not, Put your stop at 316.85. Your take profit would be up here at that top zone because that's where someone will struggle. Some people talk about the gap fill. That'll be a resistance area in there, whatever. By the time it gets there, your stop is already in the green. So you take a trade like this. After that, we'll just move it on over. Okay, it starts to bounce. Let's say it bounces, gets above that zone, then we move our stop up. Here we are at that gap fill zone. If it turns around, you had a green trade. Look at you go. You're like a master trader. But it doesn't because no one actually cares about the gaps. And then it keeps going up, and you just keep on keeping on. Just keep trailing. And then it gets to your take profit zone. You know what you do? You just keep your stop in place. And if it breaks above, you get to move it right on up. You just keep on going. What if you get a day like that? You just keep on trailing, and then bam, a wick like that happens, it takes you out, green trade. You get to dodge the red candles and do it again until that zone breaks. When I take a trade, something like this happens. I'm right or I'm wrong. I stop out or I put my stop in the green. That should, as my advice, this is not financial advice, your plan, that should be your only two outcomes. Not, I'm going to manage my risk here, but we'll cross that bridge when we get there if I'm going to stop out or not. That whole I'm going to mentally stop out, sure, whatever. You might mentally stop out, not do it, and then not mentally get any sleep that night. Seen it. At this point, I've helped thousands of people. This YouTube channel is new, but I've helped thousands. I've seen all the excuses. So I'm just here to help you be stronger than one of your excuses. Because this is a real reason. What this all boils down to, again, is we talked about raising rates earlier, and that is going to take tech for probably a little spill. Tech is the one that stands to get smoked the most. One thing I did enter today is that XLF call. Got in a little bit before. I had that alert to buy XLF, but I did buy the 40s for January 20th, 23. Did I buy the 40? Yeah, I bought the 40s because it was $3.95. So I'm down on them right now. I literally just bought them right before this. So I'm in this strike, 40 strike for January, $3.95. So it's $395 per contract. Again, going to hold those until I'll worry about them in November, December, around there. Other than that, in the AMD play. Is AMD doing good? Am I green on it yet? No, just more red. Well, we'll see how that pans out. Maybe I suck at trading, and then you'll know by the time you see this, is AMD green or red, and did I make a bunch of money, or did I stop out? Those are my two options. I lose a little bit, make a little bit, or I make a little bit more. I'll leave it here with this, because here's the stock market. Here's how you can boil everything down. There's 4 directions that thing's going to go. Right now, you can go sideways. That's neutral. That doesn't. Technically, it's a direction when you're playing options. It's going to go a little bit green. It's going to go very green. It's going to go a little bit red or a whole lot of red. Take all the data you can at that point. Your gut, your emotions, your Facebook, your wife's boyfriend, right? The guys on YouTube that you watch, the girls on YouTube, the people on Twitter, all your indicators, whatever you want. You take all that data and you put it in and think, I think one of these directions. And then you put your money where your mouth is. I'm going to speculate this. And you're going to build your plan around that. If that story breaks, where does it break? Right there, that's your stop. And then here's your entry. Here's your stop. How much per share are you risking? How much are you comfortable risking? How many shares can you fit in that? And there's your play. Keep that this year and hopefully do all right. Because with movement comes a lot of money. So if tech doesn't, even if it crashes, that's the exciting times for the stock market as a trader, because we'll make a lot. Financial people, no, I worded that wrong. Investors, they get to watch their money go down and then back up. We get to ride it all the way down, make a whole bunch of money, buy the dip, ride that all the way back up, and make a lot more. One of the perks about being a smaller now I say smaller, you're not managing billions. Okay, I know people that do. They can't play this game. But us as retail traders can. We can play the in and out game. We can play the all short on the way down, buy it on the way back up. And years that crashes or corrections happen, those are amazing. I don't know if I'll ever make more than I did in 2020 after what happened. So I'll end it here. Sorry for a long-winded way of saying FOMC. They said a whole lot of nothing and a little bit of a scare at the same time. And watch out for tech this year. Warning shot. I'm very cautious with how I say crashes or warnings. I do not call a crash every time I get the chance to speak to a camera. that's foolish. So I am very careful when I do come out with videos like this for this reason, because I want you guys to actually pay attention. So I'll end it here. Comment down below if you actually made it all the way to the end, and I will see you in the next video.